Oh, hey, what's up, everybody? This is Jimmy with Trading Decoded. And it's June 27th, 2024, 4:04 in the afternoon. Like, share, and subscribe. Thank you for watching. Till next time. Just kidding. Today is going to be a relatively short video. And the reason for that is because, well, the good portion of the people in our community today, or at least in my particular trade room, were able to make money on two very, very good moves early in the day, and that was enough to fulfill their voracious need for making money, and there was a lot less reason to look for additional trades. With that said, there were some setups that were to be had that coincided with both Qs, SPY, and ADD, but we also, as we have for the last few days, are having a much slower moving chart in the second half of the day. Today was one of those days. Yes, it looks like it was trending, and it was, but if you look at the pace that it was trending, you really start to see that theta gets a lot stronger, as you know, trading options in the end of the day, and it's hard to outpace that if the chart's not moving. With that said, we're going to go ahead and take a look at the two trades that we took this morning. That ended up being fantastic and comfortable, and was two very, very, very good trades. Okay, now started in pre-market again. We had low volume pre-market. Qs in the pre-market was looking very low volume-y, if you want to call it that. Spotty, bunch of gaps in between all the candles, even all the way up into the open. This is not a good look, okay? It makes me feel like there's not going to be a ton of follow through. So you got to be careful when you see something like this in the pre-market. We call this the couch in the kitchen, okay? And what I mean by that is if you walk through your front door and you found your couch in the kitchen and you didn't put it there yourself, you're probably going to be hesitant on continuing to walk inside the house, wondering who might be in there that would have been crazy enough to put your couch in the kitchen. Well, we want to look at the market the same way. If pre-market is looking odd or off, it's probably a volume thing. Maybe you should just be a little bit more patient on those days. Okay, that's my thought process. Today, we exercised that patience and got rewarded for it shortly thereafter. So, what did we find to trade? Well, our call line was 545.73. Our put line was 545.18. Okay. Now, as we got into the open, we knew where the call line was. We knew where the put line was. I personally, at the time, was prepared to take puts, not because I have a put bias, not because it can't go higher, but because if I was going to take the call scenario, I felt like I'd have enough time to switch to calls, which I didn't, and or we were up against resistance anyway. So I'd rather be prepared to get in aggressively at a level of resistance in case it gives me a reason to get into the downside. Otherwise, I could switch over to calls, play the call scenario if it was to present itself. Now, obviously, puts didn't work if you bought them aggressively at resistance, okay? If you bought here, you could have made, now we did move back down to the next line. So if you played line to line on that super aggressive trade, you would have hoped for a move lower. In fact, we were hoping it would get at least to the support that we'd made in pre-market, preferably down to the next line. It didn't do that, okay? So if you took the trade, you had the opportunity to get out, but you needed to be quick. But more importantly, if you were patient, the call scenario played out wonderfully. Now, here's the thing with the call scenario. The candle breached the call line and closed above the call line, but not very close or not very far away from the next resistance line in order here. The problem is, if you were watching SPY and SPY alone, this probably should have prompted you to not get in the trade. Because if you respect resistance, then there's not enough move left to take the trade. However, the good news is we're not just looking at SPY. In fact, SPY is kind of like a child stuck between two parents. Parent 1 is the Qs. Parent 2 is ADD or small caps. And if SPY is being pulled in opposite directions by both parents, she's likely to stay sideways or not move very much. By she, I mean SPY is the child stuck in the middle. If one parent is stronger than the other, which is what we're constantly trying to figure out as quickly as we can in the day, being is Qs controlling SPY or is ADD controlling SPY? In this particular instance, it was very, very evident that Qs were controlling SPY today. How is that evident, you might ask? Well, we're going to go back to the beginning and we're going to look at what was happening at the open. SPY, green candle, Qs, green candle, ADD, red candle. Okay, fine, Jimmy, that's just one candle. ADD, not only one red candle, several in a row. Qs, not only one green candle, several in a row. Which way did SPY go? Up with the Qs. We know the Qs are driving. When we know the Qs are driving, we can kind of cut out ADD and pay attention to the Qs. Look at how closely these charts resemble themselves. Okay? Look at this. This is telling you that SPY is following the Qs. So we can kind of become oblivious, not completely. You want to know what ADD is doing as far as trends go, because if they're moving in the same direction together, that's a good thing. You want to be playing in that direction, okay? But very quickly, we were able to establish the fact that the stronger parent today was the Qs. So if we look at the Qs at the time we were looking to get into calls on this trade at 933. Now I happened to get in at 934 because I wasn't prepared at the time, but we did close above our call line. I know we're close to resistance on SPY, but since we know Qs are dragging SPY up, we look at 934 and what had just happened on the Qs. We closed or were breaching resistance here with room between its first line and next line. Okay? So in that case, I said to myself and everybody else, there's still room in this. Let's see if we can take it higher if you're not already in. And then the reason we considered getting out was because we started to reject up here. Now, again, we don't know which line is going to hold its resistance, which one's not. So as always, when we cross through them and you're in your calls, just put your stop loss somewhere trailing so that if it does, when it does, hit the line that's no longer going to allow it to continue up, you're not stuck holding the bag. Okay, so our first trade of the day was the call line and it paid wonderfully. Now, I only went in from here to the pink line because I respect the pink line on SPY. Okay, I left a lot of money on the table, but that's all right. I still made 22.5% on that trade. That's good enough for me. That's good enough for me, especially considering it took me 1.5 minutes to make it. Okay, and for those of you who got in because you were ready for it and you got to make a lot more money, that was a 50 plus, 60 plus % trade for you. Congratulations. All right, line to line to line, whatever. Take your Qs from the Qs. If we know the Qs are driving, follow the Qs. You can also start to ignore SPY. It sounds weird, but if you were to trade the Qs chart today without even looking at SPY, so if you were trading Qs chart with SPY contracts, you probably still would have made money just trading the Qs chart. That's how close in lockstep they were for the most of the part today. Okay. This trade here ended up being, in my opinion, the best, most fun, and cleanest trade of the day. Now, we're near resistance to the high day on SPY, but that's not the important part. It's a helpful part, okay? We're at resistance on SPY, okay? Qs are also putting in, at an area of resistance, a lower high, and that's where we say, guys, Qs are putting in a lower high. You know what that means? It means support below is usually likely to fail. If you want to get into this, let's take a ride, okay? We bought puts. Some people bought at the point up here. I bought on the next candle. We were hoping to make it down as far as it would go, as we always want it to do, right? So at 947, we were also getting ADD starting to show some wicks on top. It printed its first red candle in a while. And then while we were in the trade, and this is the part, we weren't taking the trade because of ADD. We were taking the trade because of the Qs. We stayed in the trade because by the time we were getting down to our profit levels, look at what ADD was doing. People were saying to me, Jimmy, should we get out of this line? Jimmy, should we get out of this line? I said, guys, ADD is telling me that there's a potential for more room in this move. Let's hold on. We held on. We held on. And as we get through these levels, there's circles at every one where Qs were hitting support. But ADD continued to print red, giving us confirmation to give it a shot. Now, as we got down and saw this candle starting to print green, ADD, Qs, and SPY all started to print green. That's where you should consider stopping yourself out of the trade. We got a nice move to the downside. You might have been looking at this saying, that's a pretty good support that we created on the Qs in pre-market, or I'm sorry, very close to open. We broke it, couldn't get back below it. I'm going to take my profits if we get to this line. Many people said Qs are coming down to the pink line as the stink line. I'm going to take profits when we get there. Many people held, saw the bounce off of this, marketed out while it was pulling back. Some people waited for a candle close back above one of these lines of resistance. Whatever the case is, if you got in up here, you made good money. Some people made over 100%. Some people made 90. Some people made 70. Some people probably lost because they held too long. I don't know. But at that time, and this point of the day, I had more people than I can remember in my trade room saying, Jimmy, awesome day. I'm one and done. And that puts a big old smile on my face because that tells me they made good money. They were happy about it. They're happy with their returns, and they're no longer going to put that money at risk trying to make more. That's music to my ears. Okay? Now, if you look throughout the day, waiting for trend breaks, right? I was having a conversation with somebody today who was wanting to buy calls up here and saying to me, Jimmy, how come you keep being interested in puts? And I said, because it's not that I wouldn't buy calls. It's just that I need to see things happen before I'm willing to buy calls. Meaning, if we're trending up, okay, and I want to take calls, fine, this is a wedge to the upside. But I'm not going to buy calls when I know that historically, meaning today, every time we've gotten in this area, we've been beaten down. Does that mean that we should jump into puts aggressively? No, I'm not arguing that. What I am saying, though, is don't jump into calls just because it's trending up when you know that there is a strong level or area of resistance above where you're considering doing this. If you're going to buy calls, and this was my exact words to this member, please wait for SPY to get above its resistance. Wait for Qs to get out of that range. At least wait before it's above this red box, please. Otherwise, if you're interested in a counter trend trade, I would suggest that you wait for a break of the trend line on Qs, a break of the trend line on SPY, and then see if the next support down is got enough room to justify the position. Okay? Same thing with the downside. Here was a call scenario. Okay? Here was a call scenario. We had already been trending down, trending down, trending down. Okay? We broke the trend. We got above resistance. Qs at the same time, 1156, had also been trending down. Also broke the trend, I believe, 1156. Yeah, Qs had also broken their trend. Okay, calls are good. But this person was asking me, should we buy calls here? Should we buy calls here? Should we buy calls here? I said, please, I'm not anti-calls. Just be patient. Okay? Well, let's just say you buy calls here. Are you interested in respecting this line? Are you going to take profits when we get there? Do you care that you're buying calls when the line that's been respected for quite some time now is stopping the move from going? Are you going to get out here? Are you going to have a stop loss if we touch it? What are you going to do? Or can you wait for confirmation that the buyers are getting strong enough to overtake the sellers, at least, and then take advantage of what move might result afterwards? Okay, you didn't get in at the perfect time, but you got in at a comfortable time. Not only that, you're coming off of higher lows. So if you wanted to get in aggressively into calls, at least wait for a higher low to give you this sense of security that, hey, this should, coming off a higher low, break resistance, not respect it. I'm just asking that you give yourself the benefit of the doubt. It's okay to trade aggressively so long as you protect yourself in the event that being aggressive doesn't benefit you. Meaning, you get in aggressively because this is a good support down here. Fine, I could get on board with that. I wouldn't do it, but Qs and SPY were bouncing off of a support line at 11:45 this morning, right here. Great. If you're going to risk calls in a downtrend, do it off support. This way, if it bounces like it has for every support level it got to, even a little bit, at least you start off in that trade green for a minute. You can get in down here and say, well, I bought at a great level. There's a good solid support there. If it breaches it or closes below that, that's my stop loss. Awesome. And what you can do is get into your calls here and hope that it breaks out of the downtrend and take advantage of the additional move. Also awesome. But what you don't want to do is get in when you're close to a resistance or in between lines of support and resistance. But most importantly, get in on support that is got confluence with it, meaning you're on support on Qs and on support on SPY. That is your best opportunity for any trade when you know, especially when you know that Qs are dictating what SPY does. This is like catching a falling knife. Not my favorite thing to do. I know plenty of people that counter trend trade, and that is okay. Just don't forget the stop loss in any trade, especially if you're going to take an aggressive one. This is the biggest problem for the most people. The fear and the argument is, well, Jimmy, if I set a stop loss, especially too tight, I'll get stopped out and then the trade might go without me. I can resonate with that. I understand that feeling. But what if that stop loss prevents a catastrophic loss? You're going to be happy that you had it then, right? It's one of those things that we love to hate and we hate to love. Because we've all been saved by stop losses and we've all been stopped out of trades that ended up being bangers because of stop losses. It's no different than insurance and seatbelts, right? You got to put your seatbelt on, as annoying as they may be, as annoying as the beep is in your car by not having it on. You hope you don't need it, but you're glad that you did have one when you need it. Okay? Woodworkers. If you know what if you're a woodworker, you know what saw stop is. Cool technology, expensive saw. But how much are your fingers worth? You hope you don't need that technology, but if you touch that blade, you're very happy you had it. Guns. You'd rather have a gun when you need it than not have one when you do, right? You'd rather have the gun and not need it than not have one when you do need it. Whatever it is, there's a scenario that doesn't have to regard trading for everything. Life preservers on boats. My boat's not going to sink. I know how to swim. Well, if your boat sinks, you're going to be happy that you got a life preserver on the boat, because treading water out in the middle of the water for long enough is not going to result in good benefit for you. So just protect yourself. Don't go into any trade assuming the best. Assume the worst, hope for the best. See, if you assume that the trade you're about to take is going to fail, you'll protect yourself from failure. However, if you assume that the trade you're going to take is going to win, you'll forget about the failure. And when it shows up, you're going to get hurt bad. Those are the worst ones. So all I'm suggesting, guys, is protect your capital. You can do whatever you want with your money. Just protect yourself, from your emotions, from your greed, from your lack of knowledge, from your lack of understanding price action, support resistance, or you just have an F it moment. You can do that too. Or you just decide to gamble. Protect yourself from yourself. All right. So with that, I'm going to wrap it up. I don't have much more to say. We had a nice drop here at this point, completely unexpected and out of the blue. And then we had a crazy move to the upside a little bit right into the close. But this was the last trade that we talked about before I went to lunch. And then when we got back, it was a slow mover until it wasn't. Again, to catch something like this, the only way you would have seen it is if you sign up and understand and believe in the lower highs. Typically means support is likely to fail. So if you were looking for puts, I wouldn't have done so until we were at a lower high, at least at resistance. Qs at the same time, we're doing the same thing. Lower high at resistance. Maybe there's room down. You would have never anticipated one this large, but maybe you could have said, well, if I'm buying this lower high, our next resistance or support is here. That's likely to fail. Maybe we can make it down to the next line. Still would have been a great trade. But that's how you spot those things, okay? Otherwise, you missed that, and then we dropped sideways a little bit more. Then we moved up right to where we just were before. Choppy, 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 choppy. You get lucky. Again, I don't trade this late in the day. Theta sucks. You know, the contract values drop significantly if you get any pullback against you. And, you know, if you were lucky enough to happen to buy calls down here, you got rewarded greatly. So congratulations for that. But with all that said, we're going to wrap it up. Hope you found some useful information in this video. If you did, please like, share, and subscribe. That'd be amazing. This didn't end up being a very short video. It ended up being like our typical size video. But if you'd like to join our Discord community, there's a link down below. We'd love to have you. The quarterly discount is in effect right now. You've got 3 days remaining to take advantage of it. If you're interested, the coupon code is TD2024Q2. That will take it from a $900 a year to $600 a year, which is equivalent of $50 a month. And that's pretty much it. So I hope you all had a fantastic day. Till tomorrow, I love you guys.